everyone, I'm Ryan from Awoke to Crypto. This is our news segment where I go over the latest crypto news, offer some insight and some opinions. Tonight we're going to be talking about Cardano going head to head with Ethereum, the SEC, and what they're doing with a Bitcoin ETF, and then what's going on with Harmony and maybe leading to their latest explosion. As usual, I am not a financial advisor, so this is purely for entertainment and educational purposes only. All right, let's dive into it. All right, the first thing we're going to talk about is Cardano vying with Ethereum for the most active developers. So Outlier's recent blockchain development trends report shows that from July 2020 through June 2021, that Cardano had the most monthly GitHub code repositories at 701. This is 24% higher than their previous year, and that 701 is the highest. Coming in second was Ethereum with 447, so kind of significantly higher. Ethereum and Cardano ranked first and second in terms of most active developers at 168 and 165, so they're kind of neck and neck there on the most active level. And so the reason I want to talk about this though too is because we have Cardano right around the corner. We're just days away from smart contracts going live, and Cardano is also such an interesting use case, such an interesting example because they are the third biggest cryptocurrency in the world at this point, and they don't have smart contracts. They're not live in that aspect, but they have what they do have, and the reason they've gotten to the third largest cryptocurrency in the world is because they have this rabid fan base, this community, and so these most active developers just kind of goes hand in hand with why I think Cardano is in such a bullish spot that they're going to continue just to take off. They had been kind of leading the altcoins, minus Ethereum. Obviously, Ethereum's been kind of leading the way, but they've been kind of leading the way for all the other sub-Ethereum altcoins up until recently. Now Solana's taken over, and now the king of the sub-Ethereum altcoins. But Cardano for the past few months had kind of been leading the way, getting up to $3. And I don't think there's an end in sight, though. I think once they go live, we're going to see a lot more. And the reason being is with talking about these active developers, why that's so important is what we've seen with Cardano. What's so fascinating is Cardano has grown so big just through their community. You've had this fascinating, this intelligent, charismatic founder in Charles Hoskinson, who is out there making videos every day, and through this organic marketing campaign, whether intentional or not, has built this massive following to the point where you have 70% of all ADA staked into the blockchain for something to the tune of $42 billion. Okay, so 70% is also a massive commit of having that much staked into the blockchain. That shows that it's 70%, and it's also 600,000 unique addresses, which is a huge number also. So put that in perspective. So you have 600,000 unique addresses that are wanting to use Cardano, that they've bought Cardano and they've taken an active step past just buying it on exchange, and they've figured out how to stake it, which isn't always the easiest thing to do. So they've learned how to do it, so they've showed the initiative that they want to use it, and so they're now staking it. And so what this tells me is that Cardano is set up just to keep on to take off. Reason being is you have all these people just waiting to use Cardano, but they just, at this point, they can't because that isn't live. We're days away from being live. And so with the active developers, this goes hand in hand on why they're just going to see more just exponential growth. So blockchains, like tech companies, can be evaluated with network effects. Network effects being the way to evaluate them is the more users that come on attracts more people, more developers, which brings more people, kind of back and forth, and creates this exponential growth, right? I bring on a friend who brings on another friend, and it just keeps growing that way. And so Cardano's almost kind of working a backwards way, where it just has this huge community and and the developers weren't there, but it's incentivized, I think, all this active developer growth, which is what this article is talking about, right? It's kind of like building a giant like huge community of homes, and there's no stores, there's nothing around for 100 miles. And but if you have if you have thousands and thousands, 10,000 people living in one area with no stores around, of course all of a sudden you're going to have Target, Walmart, Home Depot, Menards knocking on the door saying, we'd like to build in this area. It seems like there's high demand here. And of course, as those stores build and there's success there, more stores are going to want to build. And as that area continues to grow, it's going to bring more people there, and it creates this exponential growth. That's what I'm talking about with Cardano. You've already got the people. You've already got the people that are dying to use it. They want to use it, and these developers are now here. I'm not saying it's going to catch Ethereum by any means. It's great that they have the most active repository, GitHub code requests. It doesn't mean they're catching Ethereum. Ethereum has first movers advantage. They have years of building up an ecosystem ahead of Cardano. They've got a long ways to go, but I do think that this is a very bullish sign that Cardano is going to be a big player, and we're going to see that now, and we're going to see them for years to come. So it's just something to keep watching out for. And for me, I personally am keeping a close eye on Cardano, and gonna watch them. So the SEC has delayed their ruling on VanEck's Bitcoin ETF. Who's surprised? I'm not. Least surprising news of the day. Disappointing. Very disappointed, but not surprised to hear that. So this VanEck Bitcoin ETF, VanEck we'll give a little backstory. They had originally filed a Bitcoin ETF way back in 2018, and then they had pulled it back in September 2019. And now they had tried their hand for a second time, which is their current Bitcoin ETF that they submitted back in December 2020, so just this past December. And they've been waiting to hear a ruling on that since then. And it is yet again delayed. It has been pushed to November for 60 days. They're supposed to get an answer then. Will we get an answer in November? Who knows? Who knows what's going on with the SEC? Their current mantra seems to be anti-crypto, so I don't have high hopes. The rest of the world seems to be embracing ETFs. We've seen it in Canada and places in countries in Europe, but right now the SEC and Gary Gensler seem to be fighting crypto, so I don't have high hopes, but it sure would be nice. Speaking of the SEC, let's talk a little bit more about them. So Chris Giancarlo was on being interviewed recently on Decrypt. He was actually being interviewed about being asked about the SEC, and their most just happened yesterday. What's going on with them, the SEC and Coinbase. The SEC is looking and investigating Coinbase, one of the largest exchanges in the world, publicly traded now on the New York Stock Exchange. And Chris Giancarlo, former commissioner, a CFTC commissioner, had some comments. I want to read you because one of his comments and one of his quote in particular, I think holds a lot of weight. What he had to say about it. So, in this interview, he says, the chairs of regulatory agencies have a fair amount of discretion in terms of applying rule sets. It's important for this new innovation that we don't apply 90-year-old statutes, which is effectively what we have been doing. That right there is one of the biggest problems we're having with crypto and with dealing with the regulators. All right, so the SEC, let's talk about the SEC specifically, right? So how the SEC determines what is a security. You've probably heard this before if you've watched any kind of videos or done any research, right? But the SEC determines whether something is a security or not. If it's a security, it's under their jurisdiction. Something called the Howey test. What's the Howey test? More importantly, when was the Howey test created? Well, the Howey test came about from a Supreme Court case in 1933, the SEC versus W.J. Howey. And from that ruling, they created the parameters for what determines a security. Now let's think about that. what is the parameters for what determines a security was created back in 1933. That's when it was originally created. 90 years ago. Let's think about how much has changed in 90 years in technology and how much has changed in the world. And right there is the biggest problem that we're having with crypto and regulators and getting them to understand. They're trying to take crypto and take a round peg and fit it into a square hole, right? Doesn't work. So you're trying to get cryptocurrencies to fit into a box of whether it's a security, whether it's a commodity, whether it's a currency. And the reality is a little of each one, but it's also none of them, right? And so the answer is we need actual, instead of relying on how we test or some regulations and laws that were created 90 years ago, maybe we should create ones that are specific for digital assets. That's what we need to do instead of focusing time and energy on trying to force it into something that it's not. But the SEC seems to be on the warpath for cryptocurrency right now. The unfortunate thing is, the current commissioner, Gary Gensler, there was maybe this small iota of hope that he might be pro-crypto, right? He had previously taught at MIT, and there was he taught a blockchain class there, and so there was thought like, this guy might understand cryptocurrency or understands cryptocurrency. This could be good for us. And then he broke his silence back on August 3rd. He spoke at the Aspen Forum, Aspen Security Forum. You can find it on YouTube. And when he first started talking there about cryptocurrency, you watch that interview. It's about 50 minutes long. It feels kind of doom and gloom. It's all this rhetoric about protecting the investor, but it just feels most of it just feels like he's talking down to us, that we don't understand cryptocurrency, and he's just patronizing us. And I say us as anybody investing in cryptocurrency who understands it, who has spent a lot of time researching it. I like this protecting the investor thing. Like, that sounds great, but what it is to me, what it sounds like is a marketing campaign. It sounds like they thought from the SEC is, we want to control the money supply. We don't want like this decentralized money that we can't, as a government, we can't control, but we can't come out and say that because that doesn't play well in the public. How can we spin this to our advantage? I know we'll come out and say we're doing it for the good of everybody. We're just trying to protect you. That's the way it reads to me. Just my opinion, I guess, on it, but that's the way I read it. Interesting enough, that came out August 3rd. I recommend go watching it if you really want to see Gary speak for an hour and get like a good vibe of how he views crypto. That same day, I believe it's almost the same day, it's at least the same week, but I think it's the exact same day, there's a podcast called the Unchained Podcast. Great podcast with Laura Shin. She talks crypto every week. She had two CFTC commissioners on. She had Brian Contens and Dan Berkovitz. Dan Berkovitz on. And Contens actually is no longer with the CFTC. I think he left at the end of August, but at the time he was still with the CFTC as a commissioner. And interestingly enough, in that hour-long interview on that podcast, it was a very different vibe from another agency. Yes, they talked about regulation and that crypto should be regulated, but it wasn't over-regulation. I listened to that and I felt it was a lot more promising. I understand that crypto needs some regulation, and I'm not opposed to that, but it has to be the right kind of regulation, right? And not over-regulation. Like, I don't want pump and dump scams. I don't want people getting ripped off because we have essentially Ponzi schemes in crypto. So I understand the need for that kind of stuff. So if you want two very different views from regulators from two different agencies, I recommend going and checking both of those out. The Unchained Podcast from August 3rd, and then go check out Gary Gensler speaking at the Aspen Forum Convention. You can find that on YouTube, and I can put links to both of those actually in this video. All right, let's talk about Harmony 1 protocol. So the announcement today is Harmony is offering $300 million to projects looking to expand beyond Ethereum. All right, for those of you less familiar, we'll talk about Ethereum. We'll talk about Harmony a little bit. So Harmony is a layer 1 smart contract blockchain. So they are a competitor to Ethereum. They're also a complement to Ethereum. We'll dive into that in a second. So they're essentially a finalized version of ETH 2.0. We all know Ethereum obviously is up and running, but it is currently in the works to become a proof of stake network. So they can lower transaction fees and everything else, become proof of stake. Harmony is already that. Harmony is built from the ground up. It's not a fork of anybody else. It's got 2-second finality. It has some of the lowest transaction fees in all of crypto. We're talking about fractions of a cent per transaction. And so it's got all the technology. It's already there. So in it's layer 1. So in that case, in all these reasons, it's a competitor to Ethereum. And they also market themselves, and one of their strategies is actually to be a complement to Ethereum and to all blockchains. They're also working on building bridges to these blockchains. To be for interoperability. They have a bridge built to Ethereum. They have one built to Binance Smart Chain. They're currently finishing one up to Bitcoin right now. They've got one built to Polkadot that'll be live as soon as the Polkadot network goes live. And so that's kind of Harmony in a nutshell there. And so Harmony, the tech and everything else it's done. It's there. It's solid. They're a top 100 market cap. They're I think ranked 70 right now. But the thing that's kept Harmony back is just adoption. And so this announcement today is, I think, addressing that. What they just need more adoption. And I think they know that. And that's why they're offering $300 million for more developers. And so we'll look at that a little bit closer. So what it says here is the company will allocate $180 million over the next year, with $50 million going to 100 decentralized autonomous organizations, DAOs, that can then decide how to use the capital, including supporting smaller projects. There's an additional $30 million going to partner organizations that have it deployed on Harmony that can reach end users. So that's where that $300 million is going. That's what they're doing with this, right? They want to bring more developers. They want to bring more projects on. They want to build up their ecosystem is what they're doing. And, that makes sense. They have a strong community. They have a loyal community. But it's not nearly as big as Cardano, right? Nobody's is. No one has, we talked about Cardano earlier, no one has that big of a community. And no one else can do what Cardano's community has done. So what does everybody else have to do? You have to you have to have the developers there to entice the people to come to it. It's like a Field of the Dreams things, build it and they will come. So right now they have, you have an NFT platform, DaVinci, on there. Well, what if they start adding more options for NFTs? You have Sushi Swap and Viper Swap and Mookie Swap. Well, what if they start expanding and enticing and they get Aave on there, and then they bring a Uniswap or a 1inch or other DeFi protocols? The more you bring on there, what it is it's more options for the users. And then once there's more options, then someone might look at it and say, well, maybe I'll try Harmony out. There's actually a lot of different options. There's a lot of choices I have. Once I put my money on Harmony, I actually have a lot of choices that I'm not stuck with just one or two, dApps, protocols. I can choose from a lot of different things once I'm on there. And that freedom is what's enticing, right? That's one of the biggest things that's the biggest thing Ethereum has going for them, right? Is they have the biggest ecosystem. Solana's going off like crazy right now, and they also have one of the fastest growing ecosystems. So when you grow your ecosystem, it entices people to come try your product, which of course then brings more developers, which brings more people, and then more people bring other people, and it creates that whole thing we were talking about earlier of network effects. So this is bullish news for Harmony. It's one of those ones where I could see this definitely attracting more developers, and watching, and this also with that causing Harmony to start to just take off, like we've seen the likes of some other blockchains here in the near future at some point. The second piece of news I wanted to talk about that's bullish for Harmony, just because it happened yesterday, because I believe the Harmony team is pushing hard on their weaknesses right now, the things that they have identified that have been holding them back. first being adoption, and the second being, let's talk about one of the things in the community that is often brought up is a Coinbase listing, right? A Coinbase listing for almost any project seems to be like that badge of honor of we made it. It's that thing where it gives like any project, any crypto, almost like that bit of legitimacy. And so that's something that the Harmony community has been calling for a while. They wanted that Coinbase listing. And Coinbase even talked about listing Harmony a year or two ago, but nothing's come of it since then. And one of the rumors has been for a while that that Harmony just isn't decentralized enough. That's one of the rumors, right? And so the reason I bring all this up is an announcement yesterday coming that they made a partnership with the Pocket Network. And coming a tweet directly from one of the Harmony Protocol developers, the tweet reads, "We are partnering with Pocket Network to rapidly decentralize Harmony Protocol." Rapidly decentralize. As I just said, if we're talking about the Harmony Network, what's one of the things holding them back from, let's say, a Coinbase listing is the decentralization. Well, if this partnership is going to rapidly decentralize them, then could a Coinbase listing be right around the corner? I'll explain why this Pocket Network can actually do that. So if we go click on actually the proposal link here and look at it, so what this is telling us is what the Pocket Network is essentially is like a service tool, or they're a blockchain service essentially. They offer service nodes, APIs for blockchain developers, and by Harmony partnering with them, what now they have access to is the Pocket Network, which offers 5,000 nodes. And by offering 5,000 nodes, that would greatly increase the decentralization, obviously, for Harmony blockchain. And again, all this is important if you care about a Coinbase listing. Does that matter overall? Does it not? I don't know. The decentralization matters. It absolutely matters. You know, if you care about crypto and the actual heart of crypto and the decentralization, then it matters. If you care about price movement, then a Coinbase listing does matter, because there's the Coinbase effect, and there's if you want to get in it before that and watch to see if it goes up after, then there's that speculation too. So that's part of the reason why I'm bringing that up, and it's part of the reason I think that they're addressing this is, again, it feels like to me that the Harmony team is addressing what they view and that's seen as their weaknesses. The only things that have been holding them back are things like that, decentralization, not enough adoption, and here you go, bam, they're hitting them 1-2 punches 2 days in a row. So that's kind of what I want to talk about Harmony in a nutshell. I think both those are very bullish signs for the project, and I'm involved in the project, and I'm keeping an eye on them. Well, that's going to do it for this video. Thanks for watching along. You can follow us along on Twitter at Awoke2Crypto. If you enjoyed the video, you can give us a like, and I'd appreciate you hitting the subscribe button. Until next time, thanks.